Glad to have you back. Effiong Ekop is live in the studio for us to discuss markets today. Effiong, what the market is in green? It looks pretty good.
Yeah, we've seen the market recovering from the loss of 2 days ago. And yesterday it managed struggling, but today it's very high, 1.25%. Very great percent. And coming on the back of huge gain by telecom investor, telecom stock, MTN. MTN has been able to get full 10% price advantage. That's a very great one on day. Then we see the banks, Access, UBA, Zenith, and Wando, all of those big companies, running after. We are running a bullish market now. Since the start of the new year, it's only 1 day. That's how we traded and closed in red. The rest of them had been in green. And the bullish run, analysts are projecting that it will cover a whole lot of the first quarter of this year, supporting the fact that the year end of the banking industry last month, December, that means the markets, investors, fund managers, they are expecting what the banks have been able to do for the whole year. So that alone would push stock prices, to very high levels. Again, you remember that in the last quarter, let's say from September till December, we've had so many of the banks coming to the market to raise funds. Central Bank have been able to verify the rules and the way that they raise this fund. And so this January, we expect that some of those shares should be brought to the exchange for supplementary listing. And once they list them, they will start to mark up. And so the market is opening itself for more business. Do not forget that last year, the exchange was, classified among the 3rd most profitable exchanges in global rating. Yeah. So that means even in Africa, and Nigerian market has been keeping this record in the last 3-4 years. And so we still see that this 2025, the market is going to do very well. But on the fact that government should do its own side of the job by making sure that the larger economy, is well funded and open up. There's efficiency and the provision of infrastructure so that businesses, especially the smaller ones, SMEs, will be able to take advantage and then grow. Then we should reduce inflation so that there should be investable funds in the hands of households and individuals. Then they come and play in the market and be able to take advantage of all those things that are available. The market is really international. It is opening itself, to more business.
Interesting stuff. I'm really looking at this and how investors should position themselves as we move on in 2025.
Investors are already taking positions.
Wow.
Fund managers, if you see the way they have been grading themselves and going to the sectors, very, very good. We had 3 listings last year. I can always remember the performance of one from the oil and gas, this company, Arada. It's been able to, show itself up, and many people made a lot of money out of that company. Then we've had others. The banks, I must always say, the banks are ready to, be showing themselves as the ones that have liquidity anytime, any day. You see, many of them do not even want to play in the local settings. They are trying to be national banks or international banks. That means they have huge funds, or they are expecting to even have more. What that means is the economy. We are supposed to have more money and be able to open up those sectors that we were not able to play. Then again, we are expecting big companies, especially from the oil and gas sectors, to come in and be listed this year. I should mention that we expect NNPC, we expect Dangote Refinery, and some other ones that I may not be able to mention now.
Coming to the market.
Yes. So all that we need is a situation where we bring more people to participate in the stock market activities. Currently, knowledge of the stock markets and even the population there, very, very low. Less than 10% of the population of the country, the play in the stock market, and that's not good enough. So many people that will come in with huge funds, they will have opportunities. Don't forget, the market provides investable funds for companies doing businesses to grow. Then investors who stake on the shares of all these quoted companies, they are investing for their futures. And so if you retire and you have stocks in very good companies, then you don't have problems. You can take care of your health. You can feed yourself very well. Those who go to students can still buy stocks and be able to grow themselves. Businesses, there are so many opportunities. But knowledge of the market is really the problem. You see, people like to, spend money carelessly, throw parties, maybe club.
At times,
it helps.
They will justify that too.
Yes, it helps. But if you are interested in growing, preparing for the future, this is it. In a growing society, at our levels, when you are able to provide for your accommodation and then you buy food, and the rest of the money you put in the stock market, because you see, playing the stock market is really very, very good in the sense that no matter the level of inflation, in most cases, stocks always bring benefits that are above the level of inflation in the economy. So you are always lifted up in the larger level.
I must thank you so much, Effiong Ekop, for that breakdown, as usual.
Thank you.
I wish you a great year, as usual.
Thank you.
All right, then. Well, let me take you outside our shores. Global bond is today, and the dollar held steady near its highest level in more than a year, although stocks continue to fall with most Asian indexes down. Japan's Nikkei dropped 1.2% with additional headwinds of a rebounding yuan, which added about 0.2% to 158.08 per dollar following its slide to nearly 6 months trough of 158.5 per dollar on Wednesday. Australian stocks benchmark slipped 0.5%. Taiwanese shares lost 1.1%. Hong Kong, Hang Seng, and Mainland blue chip index were both little changed. US S&P 500 futures pointed 0.2% lower after the cash index eked out 0.2% gain overnight. Pan-European stock 50 futures were slightly lower, though UK FTSE futures added 0.2%. In a final push to keep advanced technologies out of the hands of China and Russia, U.S. President Joe Biden plans an additional round of restrictions on the export of artificial intelligence chips just days before leaving office. This is to curb the sales of AI chips used in data centers and concentrate development in friendly nations to align with American standards. These regulations will create 3 tiers of chip trade restrictions and expand semiconductor caps to the world, most of the world. Following this proposal, shares of NVIDIA, the leading maker of AI, dipped more than 1% in late trading after being up 4.3% this year. NVIDIA objected to a proposal stating that the restriction would not reduce the risk of misuse but would strengthen economic growth. The Japanese government has urged Pakistan to resolve import restrictions on automobile manufacturers and ensure the safety of personnel working on official development assistance programs. Now, these were the focus of discussions during the 8th Japan-Pakistan high-level economic dialogue held in Tokyo. The dialogue emphasized the importance of Pakistan's consistently implementing the International Monetary Fund's program. However, they called on Pakistan to streamline tax and custom exemptions procedures through the Ministry of Economic Affairs to address insufficient understanding of bilateral commitments regarding these exemptions. Crude oil prices were little changed today, with investors weighing firm winter fuel demand expectations against large buildup of fuel inventories in the U.S., the world's biggest oil user, and macroeconomic concerns. U.S. West Texas Intermediate crude sells for $73.36 with an upward price margin of 0.46%. Brent also experienced an upsurge 0.12% to sell for $76.25 per barrel. Bonny Light sells for $78.62 with a downward price review of 2.84%. And for the OPEC basket, dealers offer $76.07 with a decline of 0.14%. Well, that's our show today. Thank you so much for being a part of it. I'll see you tomorrow, same time. Thank you for watching.